Welcome everyone to Maze Live. Hope everyone was able to take a nice break after the tax season. I heard from a few of the partners I work with about their trips to Hawaii, so hope you all enjoyed your trips and time off. For those who don't know me, my name is Jose Paredes, and I'm a senior account manager here at CorpNet. I want to thank all of our partners who are joining our event today. It is great to see everyone here, and welcome to anyone new. Mid-year is a great time to get a refresher on payroll. Here at CourtNet, we help businesses register with the respective states to issue payroll, so we know a thing or two about the process. So let's get started with today's overview on payroll. A reminder, as I am going through the slides, feel free to post any questions you have in the comment section right here on the page, and I will answer live later on today's session. Now let's get started. Getting clients to getting clients set up and running on payroll. Let's talk about payroll tax basics. This is a payroll tax overview. In the United States, tracking, reporting, and paying payroll taxes are required legally to hire and pay employees. Some taxes must be withheld from employees' paychecks, and the employer must pay some. Businesses must register for the appropriate payroll tax accounts at the state and federal levels, and sometimes the local level if there's a local withholding tax to process employee payroll and file returns. The rules and requirements vary by state, but generally, payroll tax might include federal income tax, state income tax, local income tax, FUTA, SUI, Social Security tax, and Medicare tax. Here's a list of the tax liabilities, the requirements, and a brief description. First on the list is income tax withholding. Taxes withheld from employees pay for federal income taxes owed by the employee. The amount is determined by the employee's W-4. We have FICA tax. This is Social Security and Medicare taxes called FICA, Federal Insurance Contributions Act, are shared between employee and employers. Additional Medicare tax. An employer must withhold part of a Social Security and Medicare taxes from employees' wages. The employer also pays a matching amount. We got FUTA tax. The federal unemployment tax account provides for payments of unemployment compensation to workers who have lost their jobs. Self-employment tax. Self-employment tax is a Social Security and Medicare tax, primarily for individuals who work themselves. We have unemployment insurance tax. State unemployment insurance or SUI tax is similar to FUTA, but controlled at the state level. Amounts, requirements, and ownership vary by state. We have the disability tax or insurance. Disability tax or insurance is controlled at a state level. Amounts, requirements, and ownership vary by state. We also have the workers' compensation tax, provides temporary benefit payments to workers for non-work related illness, injury, or pregnancy. Varies by state. And finally, we have the state and local income tax. State income tax, SIT, and local tax varies by state, county, or city. What are state payroll tax accounts? Let's start with the SIT, state income tax. SIT is a required tax applied to an employee's wages. Small businesses owners are responsible for deducting SIT from an employee's gross wages and submitting this tax to the state's tax agencies. All states require SIT withholding except for the states of Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. Now let's talk about the state unemployment insurance, the SUI. If you hire employees, you are required to pay SUI on their wages. The SUI program offers short-term unemployment benefits to eligible workers who are unemployed because they have lost of or theft. Or left their jobs. SUI eligibility and benefits are determined by the individual state laws. Employer taxes associated with SUI rates vary by state. Here are 10 steps for setting up payroll. Number one, obtain an EIN. A company entity, whether it's an LLC, a corporation, or even a sole proprietor, must have a federal tax ID. Number two, apply for state and local tax ID numbers. This includes a state unemployment tax ID if required by the state. Number three, set up payroll bank account. Number four, decide on payroll schedule. Common schedules include weekly, bi-weekly, semi-monthly, and monthly. Some states may require specific frequencies under different circumstances. Number five, obtain a workers' compensation insurance policy. Number six, determine what optional employee benefits you'd like to offer and what portion of the cost will be deducted from employees' paychecks. Number seven, collect your employee information. This would be name, start date, social security number, date of birth, compensation details, Form I-9, and Form W-4. Number eight, classify your employees into independent contractors versus employee and exempt versus non-exempt. Number nine, choose a pay period. And number 10, manually calculate your tax requirements per employee. These are 5 steps for processing payroll. Number one, calculate payroll taxes and voluntary deductions. Gross pay. For non-exempt employees, this involves tracking workers' time and calculating their pay according to their hourly wages. For exempt employees, gross pay is their salaried amount. Gross pay is also includes bonuses, reimbursements, and commissions earned by employees. We have the pre-tax deduction. Next, pre-tax deduction should be subtracted from gross pay. Examples include 401k contributions, medical insurance premiums, and HSAs. The tax deductions. Employees should then deduct taxes. Example, federal, state, local income taxes, FICA tax, and possibly state and local payroll taxes from the adjusted amount. It is important to calculate them accurately according to the employee's W-4 forms and state and local income and payroll tax rates. Other deductions. Any additional voluntary or court order deductions should be subtracted from the adjusted amount. Examples include Roth IRA contributions, charitable contributions, and court-ordered wage garnishments. Net pay. The end result is the employee's net pay and the amount the employers should pay the employees. Number two, pay employees via paper checks or direct deposit. Number three, record payroll transactions. Number four, report taxes to state and federal authorities. Employers must complete tax filings for federal tax withholdings to the IRS. They must also report state tax withholding to the state's departments of revenue or other agencies in charge of state income and payroll taxes, and local income tax withholdings to the appropriate local tax authorities. Number five, remit payroll taxes to tax agencies and benefit providers. Monies withheld from employees, pay must be sent to the appropriate tax authorities and providers of benefits such as retirement plans and health insurance. Employers pay their federal payroll tax online using the Electronic Federal Tax Payment System, the EFTPS. The methods for paying state and local taxes vary. These are a few important federal forms. Form W-2, wages and tax statement, reports that employees' annual wages, salaries, and any taxes withheld from that compensation. Form W-3, transmittal of wages and tax statements, provides a summary of the annual compensation and deductions the employer reported to its employees via W-2 forms. We got the Form 940. Employer's annual federal unemployment tax returns reports the employer's annual FUTA liability. Form 941, employer's quarterly federal tax return. This is used to report the income, Social Security, and Medicare taxes withheld from employees' pay and pay the employer's portion of Social Security and Medicare taxes filed quarterly. Form 944, employer's annual federal tax return. This is used by businesses that will have an annual employment tax liability of $1,000 or less. Employers must contact the IRS by April 1st of the current year to request file Form 944 instead of Form 944. Form 1099 NEC, non-employee compensation. This form reports payments made to any non-employee individual or entity to whom a business has paid $600 or more for services. Form 1099, miscellaneous income. This form reports payments made to each person or entity a business has made in royalties, $10 or more, or rents, medical, health care, and certain miscellaneous forms of payment, which is $600 or more. We have Form 1096, Annual Summary and Transmittal of U.S. Information Returns. Collectively summarizes information from the 1099 NEC and 1099 miscellaneous forms that a business issued to individuals and entities. Forms 1095-C, Employer Provided Health Insurance Offer and Coverage. Provides details about the health coverage offered by an employer, which must be sent to all employees if the business has 50 or more full-time employees. Form 1094-C, Transmittal of Employer Provided Health Insurance Offer and Coverage Information Returns. Collectively summarizes the information reported on the 1095-C forms that an employer issued to its employees. These are some ways to prevent payroll tax penalties. All payroll taxes must be deposited with the government in a timely manner. Employers have the responsibility to file employment-related tax returns and deposit employment tax according to set deadlines. If you fail to make a timely deposit, you may be subject to a failure to deposit penalty of up to 15%. Responsible staff and companies who fail to deposit the amounts withheld from employees' paychecks may be subject to a 100% personal liability. This recovery penalty is triggered when a person with the authority to make payment decisions willfully fails to deposit the taxes. Tips for controlling cost. One of the points here would be to hire independent contractors. Right? Independent contractors are not considered employees, and therefore your business does not have to pay or match payroll taxes. Be careful to stick to the guidelines established for independent contractor status, as the IRS and or the state's tax boards could come after you for back payments of employer taxes. Companies can also elect S corporation status. S corporation as structured as a pass-through business entity, which means profits and losses are passed through to the company's owners and shareholders. S corporation owners are also considered employees, so their taxable salaries can be lowered and there are fewer payroll taxes to be paid. Tips for making payroll easy. There's a lot of payroll software services out there. They allow you to onboard employees online and pay workers via direct deposit instead of by check. Some software services automatically calculate state and federal taxes while also handling your tax filings and payments. The investment can easily be worth the cost. And down below, you'll see a few of Corpnet's partners that offer such payroll services. We have Gusto, Intuit QuickBooks, and Patriot. Considerations for paying business owners. These are the owner's payroll options based on entity type. So we have the single member LLC, which can have taxable distributions or owner's draw options. We have multi-member LLCs, which can have taxable distributions. We have S corporations, which can have taxable distributions, salary options, or reasonable compensation. We also have the C corporation, which have both the salary options and reasonable compensation. Owner payroll for and limit liability companies. Take a draw from the company. Write a business check in the name of the owner, or it can transfer funds from the business bank account to the owner's personal bank account. Record owner draws in the company's accounting software. Calculate and report self-employment taxes. Calculate and report business income via Schedule C, Form 1040, profit or loss from business. Owner payroll for S corporations and C corporation shareholders. Set a reasonable salary for shareholders and employees. Calculate payroll taxes and voluntary deductions. Pay employees via checks or direct deposit. Record payroll transactions. Report taxes to state and federal authorities. Remit payroll taxes to tax agencies and benefit providers. Defining reasonable compensation. S corporation owners who perform more than just the minor work for the business typically need to be on the payroll because they must receive a reasonable salary. Owners who take a salary that's below the market value for the services they perform or claim all of their income through shareholder distributions may be audited and penalized by the IRS. A reasonable salary for S corporation owners is one that is a comparable business would pay an employee to perform similar job duties. To determine a reasonable salary, S corporation owners can purchase compensation analysis reports or conduct their own research using the Bureau of Labor Statistics and other sites that provide salary information. The 60/40 rule is a simple approach that helps S corporation owners determine a reasonable salary for themselves. Using this formula, they divide their business income into two parts. You have 60% designated as salary and 40% paid as a shareholder distributions. And I would just want to let you guys know that through CorpNet, of course, you have a lot of tools and resources. Through your partner dashboard, you are able to take advantage of many of these tools and resources. These are just a few examples of the options you have available online. Now, this finalizes our presentation. We are now going to jump into some questions, and we'll definitely love to provide more information for those of you who have any questions. So feel free to put them on the chat, and we'll definitely discuss. Okay, we have a question. Does CorpNet offer full payroll services similar to Paychecks? So we don't offer payroll services. Instead, what CorpNet offers is the initial registration to get the appropriate tax account set up. So for example, if your client hires a new employee in a particular state, CorpNet will be able to set up the income withholding, the unemployment, and any other local tax registration that's required by that particular state. So we can help set up the login accounts and help the clients obtain and get approved for their state tax IDs. The ongoing payroll, for example, payments, any withholdings that needs to be paid to both federal and state, you can use resources such as Gusto or Intuit. We got another question here. Would the setup steps change if my client is running payroll in a state other than their home state? The answer is no, right? The process is the same. Now, of course, based on the employee, if they are working remote or if they have a working location outside of the company's home state, we are still able to set up their tax accounts. As long as the information required is provided, we should have no problem in getting those accounts approved. We got another question here. Can owners, officers, members of an LLC corporation be on payroll? And the answer is yes. Right. In order to be able to run payroll for the officers and owners of a business, the S Corp election must be requested, and the process would be the same in setting up those accounts, right? Depending on the state, and this of course would apply where the owners officers live. We would set up the income withholding, unemployment, and any other local tax liabilities. We have another question here. What is the difference between SUI and SIT tax, and how does it relate to payroll? Great question. So the difference here is the tax liability requirements. Most states do have the SUI and SIT, SUI being the unemployment insurance tax requirement, SIT would be the income tax withholding. Now, there's an exemption to a few states that don't have the income withholding. But some of these states will only require unemployment insurance tax to be set up. And there's other states, for example, Pennsylvania, who do have many localities where we would need to register for additional accounts outside of the SUI and SIT. And I think that was all the questions for today. I got one last question here. Do you all work with ADP? Is it only paychecks? So yes, we do actually work with ADP. A lot of these payroll providers do go through CorpNet to set up the initial registrations. Right, so if you do have ADP software or you work directly with ADP and you need accounts to be set up, feel free to submit your request through CorpNet or contact your account manager. We will be more than happy to help in setting up those accounts for you guys. Awesome. Well, thank you once again, guys. I appreciate your time. Great questions, by the way. I want to thank everyone for tuning in. A copy of the slides will be uploaded to Facebook and LinkedIn, so feel free to download and use as a resource. Also, reminder, if you have any follow-up questions, please post them in our group or call us direct at 888-449-2638. Our next live will be in July with CorpNet's amazing Director of Operations, Milton Tercios, who will be talking about a super hot topic, the corporate meeting minutes. We also welcome any ideas for future live events. If you have questions or topic ideas, post them on LinkedIn or Facebook so we can review and consider for future lineups. Thanks everyone once again. See you next time. Take care.